Hey everybody, how you doing today? Welcome to Stock Markets with Bruce. It's Uncle Bruce here from Creston, British Columbia, Canada, just north of the U.S. border, where we are being notified today that Canadians cannot cross the U.S. border for another month. We cannot come down there by car for another month till at least September 21st. That will be released officially today, but the word is already out. The Canadian border, for Canadians, we can't cross into the USA. USA will not let us in by land, even if we're vaccinated, what have you. We can fly in, but we cannot drive in, and that is another extension for another 30 days. The Dow is down 145 points on the pre-market. It's not like a nasty, god awful, 500 point, 800 point pre-market drop. It's 145 points. It's a nothing burger. S&P's down 14. Nasdaq is down half a point. This market, it can turn on a dime into the positive. It is oversold. The bow and arrow, it has been pulled back, and all you got to do is let her go, and we're up. We're up for a run here. It's a question of which stocks will run the most, which stocks will not. Can anyone explain what a blank check company is? Well, that's a SPAC. A SPAC, when it gets underwritten at $10 a unit, is a public company, a company that went public with no business in it. It has a board of directors. It has a CEO. It has cash. The cash goes into trust. And the SPAC, the public company now, is on the hunt for a private company that it can merge with. And the private company will end up owning about 82% of all the stock that's issued and outstanding by the time the private company is acquired by the SPAC for stock. It's a reverse takeover. The SPAC issues more stock to the private company than they have outstanding already. And that way the private company ends up the largest shareholder of the entire organization, and it then inherits the use of that money that's in trust, which is maybe 150 million, 250 million, 450 million dollars, 500 million dollars, however much they raise. SPACs that I have followed since February, March, who usually, almost every one of them, I think every one of them, not only have the SPAC money in trust, they also, when they found their private company, they also were able to raise additional money at $10 a share from Wall Street over and above the SPAC money. And that is why stocks like Sofi and ATIP and Matterport and ME and Fifth Wall, Vector, Spire, Sextera, all of these companies are sitting on more than 400, 500 million or more dollars. In the case of Sofi, I think they raised 2.3 or 2.5 billion dollars through the SPAC acquisition and PIPE financing, this initial financing. That's what a blank check company is. That's how it works. What are your thoughts on buying SoFi calls? $10 expiry, April 2022 for $5.45. Well, they're in the money $4, so you're paying $1.45 premium. Not that high a price to pay in that sense. The stock's at $14. And theoretically, depending on the brokerage firm you're dealing with, you might be able to buy them on margin at $7. Your money, $7, the broker money. But I don't recommend you do that. You're better off buying these for $5.45. Second option, the second idea is write put contracts. Write $15 put contracts on SoFi for April 2022. See what kind of premium you can get if you write a put contract. And that way you're committing to buy the stock at $15 less the premium you just got paid. That might be a better way to go on the SoFi. I'm just saying look into it. I'm not saying you definitely should do it, but you might want to look into that as a possibility, as a secondary way of doing this trade. If you're going to play options, you're going to play options. You're looking at, you say what, April's right? April 2022. I'm just looking at them right now. April 15s are sitting at 4 to 410. So you would be committing to buy the stock at $11 a share if you get $4 a contract. So that might be the way to go, because if the shares go up to $18 in the next few months, just conservatively 18, these are out of the money. And all of a sudden, they might be trading at $1.50, and you take the 250 premium. Isn't VACQ merging day today? Rocket Lab. Today is Rocket Lab day for VACQ. Absolutely Rocket Lab day. Yep. 1250 calls on ATIP are sitting at $16. What are your thoughts on ATIP Febs? 16 cents for a contract. What do you think about that? Well, on the one hand, I look at that as a gambler's deal, because if you buy them for $16 a piece, you can only lose $16 a piece. You buy 10 of them for $160. You're controlling 1,000 shares of stock, but you need it to go up dramatically between now and February. Now, if the shares only went to $8 or $9, if they just did that, these will probably trade around 35, 40 cents. They'll double. They might triple. They might go to 50, and you can triple your money. In order for you to make real money, some serious dough here, this stock is going to need to go to $15 a share. If it did that in January, these 16-cent contracts or $16 contracts would be trading at about $300 a piece. Now, at $320 a piece, that is 20 times your money. Now, are you going to put in 10 grand of your money into this deal? I wouldn't recommend it. But if you want to buy 10 of them for $160, it's a flyer. Sure. I would take a look at the $10 contracts for February. I would take a look at the $7.50 contracts for February. I would look at the fives and see what they're going for. But beyond that, probably that's about as far down as I think you need to go. Other than that, just buy the stock and enjoy the upside on the stock, as it comes. Because I think there will be upside on the stock. I think so. From here, yes, I do think so. Let me take a look at these Febs. The 20s are 0 to 20 cents. The 1750s are 0 to 55 cents. The 15s are 0 to 75 cents. The 1250s are 5 to 15 cents. There's at least a market of some kind being indicated. You may want to bid 6 cents for them. Maybe try to buy them for 6. Maybe you'll get lucky. Just be a penny ahead of the buyer at 5. Be a 6-cent bidder. The 10s are 10 to 35 cents. I'd bid 11. And the 750s are 20 to 35. I'd bid 21. I would rather you buy the 750s than these 12 and a halves. Because the 12 and a halves at 15 cents versus 750s at 35, even if you pay 35, it's a better deal. You're $5 closer to the money for an extra 20 cents. Yeah, I think that's where you want to go. The fives are 60 to 75, and the 250s are 115 to 185. If you can get the 250s at 120, that would be $370 a share. That would be less than what it's trading at. So that would be a good deal. Buying 250s is a really good idea. I'd say at 125, 130, because at $7.50 a share, these would be at $5 contracts. They would be $5 book value contracts. They might be trading at $6. $1.20 to $6, 5 times your money. That's where you may want to go. You may want to go into the 250s and scoop them up. Avoid those 1250s. It's just it's a gambler's a long shot table bet. But you know what? Spend a couple $100 and pick off 2 of the 250s. Try to buy them at 120, 125. See if you get lucky. Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email, through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.